Good evening, everyone. Welcome to our live Dream for All 2026 class. And I just want to get a chance to get connected with our local communities, just provide a little bit more information. As many of you know, the Dream for All lottery system does open tomorrow. It's going to run all the way till March 16th. So we thought we would put some more tools out there in our local community to just make sure that you're prepared. If you have not been pre-approved yet for the Dream for All lottery system, we're still obviously accepting new applicants to help them in the journey towards this wonderful program that we've been a part of for the last several years. I'm going to allow everybody to get into the session, and then we're going to go ahead and answer questions as we get a chance to just kind of dive in a little bit more into the program. Just a little bit about me. I obviously have been working with CalHFA for the last, 12 years as a leading provider of these programs, and I've been privileged to be a part of kind of the construction of Dream for All in the past. But we ultimately are a team specialized in first-time buyer programs. Our team is based here in Sacramento, and then we obviously service all of our clients across the state of California with the CalHFA program. Now, many of you want to know about what's happening with the upcoming registration timeline. So I thought I would first of all dive into that and share with you a little bit more about what to expect tomorrow when the lottery window does open. Again, our window is open from February 24th, so that's tomorrow, up until March 16th. So whether you apply the first day tomorrow or if you wait until the 16th, I probably wouldn't do that. But if you apply anytime within that window of time, you still have the same chances as any other applicant for the program. Now, the major prerequisite to entering the lottery is to have your CalHFA pre-approval. That does need to be done by a approved CalHFA lender. Of course, as a leading provider of these programs, if you have not been pre-approved yet, we would love to be able to help you put that together. We'll walk through a little bit more about that process in just a bit. So if you haven't been pre-approved, we'll certainly help you with that. Now, once the lottery window does close on March 16th, then there'll be a random selection process that will happen within CalHFA. We still do not know when the selections are going to be announced, because once they have identified the recipients of the voucher, there is a background check that essentially happens. So all of the information, all the data they've provided will be basically vetted and make sure that those recipients actually qualify and meet the standards of the program. So ultimately what you're going to want to do is that if you do decide to apply for the lottery, and once you've got the confirmation that you have successfully submitted your profile, then you're just going to be wanting to watch your email, because notifications from CalHFA will come via email. You obviously want to check your spam folders or anything like that, because obviously you may miss a notification. Now, if you get selected for the lottery, and again, we don't know when that's going to happen, then we revisit the pre-approval with all of our clients. And I think that's one of the questions I've been getting a lot with some of the recent pre-approval letters we've been doing right now, is if you get pre-approved for a certain sales price, let's say it's $500,000, and that's what you're basically set your application at. If you get selected for the lottery, we can always revisit or revise that Dream for All pre-approval. So every client that gets selected, I will meet with them one-on-one again to just go through their setup of their financing, because if you do get selected, then you'll have 90 days to go out and go under contract with a seller. Okay, so that's a little bit of what the timeline looks like for Dream for All. Now, I'm going to be taking questions as we go through tonight's class, because I do get a lot of questions that come up in the course of my conversations with clients, a lot of questions that we get through our socials or just email inquiries or whatnot. So we'll go through some questions. I'll take those live on air. I know we're starting to see that fill up right now as we speak, but I also want to give you some content of what's going on with Dream for All. So the first question we're going to take is, both my parents have passed. They were divorced before I was born. My mother has never owned, and my father, however, did own a home when he died in 1997. Do I qualify for with my mother? So unfortunately, if your parent did own at the time of passing, then you would not be considered a first generational buyer. Now, if a parent does not, they owned, let's say 6 years ago, but don't currently own right now as of this time, then you would be considered a first generation. But if any one of those parents owned at the time of passing, then you would not be considered a first generational buyer. Now, one important aspect to the application is if you're going to file a joint application with another person, a partner that's going to join you, only one of you need to be a first generational buyer. So in this situation, that particular person doesn't qualify as first generation, but if they're a first time buyer, maybe they have an additional applicant that is first generation that will join them. Does the buyer have to complete education requirements for the courses before they apply? So no. There is a 1 hour shared appreciation module that we would encourage you to take a look at, because I think it really helps you inform about what Dream for All and the shared appreciation program is and how it's repaid and what triggers repayment. So we'd encourage you to check out that module, but it's not a requirement for application. Now, if you do get selected and you have a voucher, then we would encourage you, well, you're going to have to take the 8 hours of online education as well as the 1 hour of shared appreciation training. Only one borrower has to have parents who've never owned a home, correct? Does it matter if one of those parents lives outside the U.S.? So yeah, so if one of those parents, well, both sets of parents could not have owned in the U.S. currently, but if they live outside the U.S. and that's where they own, then that person could be considered a first generational buyer. In the past, it has been the time frame between the end of the application window and then, what has been? Let me correct that. So basically this person's asking, in the past, what have we seen for the typical timeline for when they make the announcement? It's varied a bit, but it's usually about 60 to 90 days after the closing of the window. We'll have to kind of see how this happens. I believe last time we saw vouchers start to come out in July after the lottery closed, but I think we've kind of learned a little bit more in the selection process in terms of how the system is kind of getting through things a little bit quicker and doing the background checks. But it ultimately will take. It depends on how long that takes. Depends on how good the data is that's been provided by the selected applicants. All right. So the question is, what time does the registration window open on 2/24? I believe it's going to go live when CalHFA opens, which should be at 8 a.m. tomorrow. But again, really important to know that regardless if you're the first one in line or the last one in line on March 16th, doesn't change your opportunity for selection. Okay. And then another question is like a multi-part question here. Probably not likely, but if the property depreciates, any idea what the odds of being selected? Oh, sorry. I think the question is, if the property depreciates, what happens with the shared appreciation agreement? Well, if the home goes down in value since you've purchased it, and let's say you've gotten a voucher for $100,000, you would still owe the $100,000 voucher. But if you purchased that home for $500,000, the home dropped to $450,000, it's obviously gone down by $50,000. So there would be no shared appreciation, but the $100,000 would still be owed. All right, I'm just gonna make sure I get the second part of that question. And they have not released any of the odds numbers. I was on a webinar with some of my colleagues with the CalHFA. What we've thought historically was the probability is around 9 to 10% of selection. And then another question is, does the buyer have to create an account with CalHFA before they can apply? So yeah, so you're gonna, once the link goes live tomorrow, you're gonna go in, create a CalHFA profile. You will have to answer a series of questions. You have to upload requested documents that are in your profile. And then once you've completed all your tasks, then you will get a confirmation of that you've completed successfully your application submission. Make sure that your email address is correct, because that's the email address that they're going to be reaching out to you if you're selected, waitlisted, or of course if you're not selected. And I would encourage you when you're looking at the selection process, if you get waitlisted, there's still some encouragement there as well that you could get selected at some point. We don't know how quickly people will come off the wait list, but just this past year in 2025, we had people that got selected from the 2024 lottery system that were waitlisted for almost over a year and then eventually got selected. So even if you don't get selected, still stay encouraged. You still might have an opportunity to be a part of the program. Now, I'm looking at the questions kind of stacking up, but I just wanted to kind of remind everyone of the qualifying guidelines. all borrowers must be first-time buyers. Now, what is a first-time buyer? That's someone that hasn't owned a primary residence home in the last 3 years. So they've rented or lived in a place that they haven't owned in the last 3 years. One of the borrowers involved must be a first-generational buyer. Okay, so that means you have not owned a home in the last 7 years, or your parents do not currently own a home. So that means currently, or we've answered this before, but if they also cannot have owned a home at the time of passing. All right. Now, one of the things we use to evaluate eligibility is debt to income ratio, which means your expenses versus your income, which is 45 to 50%. And then there is a minimum credit score requirement for this program. So if you're considered low income housing, which basically means you make less than 80% of the median income, the minimum credit score is 660. If you're moderate income, which is above 80%, then you have a minimum credit score of 680. Now, the income limits on this program are different than the CalHFA standard program. So if you happen to go to the CalHFA website, you click on the income limits section, there's different levels of income. The first option is going to be the Dream for All income limits. Right below that is the standard programs like the My Home Assistance program. The Dream for All program limits are lower than the My Home Assistance program limits. So make sure that you look at the correct income limits. We have kind of a spotlight of some general markets here on screen, but we can certainly pass along to you the income limits for other markets that you might be considering. All right, let me just take a look at some of our questions. I want to make sure I'm getting everything answered. Okay, all right, perfect. Question was, how difficult is it to get a refinance for a lower rate? What percentage drop should we wait for to refinance this? So this will lock in our rate for the remainder of the 30 years. So great question. So there are stipulations to refinancing a Dream for All loan. You do have to have at least 12 payments made on that Dream for All loan. And then CalHFA does require you to at least drop your rate a full 0.5% in order to be able to consider refinancing. That one refinance that you get does not trigger a repayment of the Dream for All voucher. Now, my recommendation for any of our clients considering refinancing is to make sure that rate drops at least 1% to consider refinancing. And, we obviously, some of our clients that we've helped with the original kind of version 1 of Dream for All are now kind of thinking about refinancing, but we certainly want to have clients have at least a full 1% drop in rate for it to make sense to consider that refinance. Now, one of the things that I don't see a question yet on it, but it comes up often, is the CalHFA interest rates are set by CalHFA daily. Now, I know we're talking about getting prepared for the lottery, but for those clients that we have currently active that have vouchers that are now under contract with the seller, once you have a voucher and are under contract, then you can lock in an interest rate with the CalHFA Dream for All program. So those are set daily by CalHFA at 8 a.m. And then once we're under contract, we can strategically watch the markets to try to time basically the best opportunity to lock in that interest rate. So today's Dream for All rate was 6% that was offered for those that meet those qualifications. All right, so a question was, I'm closing on April 17th. What are the odds that I will be announced before then? That's gonna be a tough one. So if you're already under contract with a home, Dream for All might be a little bit challenging to facilitate that time constraint. I would encourage you to get connected with me to talk maybe about some of the other first-time buyer programs, because there is the My Home Assistance program, which provides 3% of your sales price in assistance. And what we find is some of the interest rates that we can offer on that program can be lower than market rates, especially if you're putting less than 20% down to purchase your home. Is there a possibility that the application and dates are shortened? I don't, can you expand a little bit more on that question? I don't think we'll have any changes in dates in terms of the lottery window. That doesn't expect, but if you have a different question, or maybe I'm not reading that correctly, please let me know. If we use Dream for All for new builds and they have an incentive that they can be used with any lender, can we still do the DFA and their incentive? So the in-house lender for the builder has to be a CalHFA approved lender, and obviously understand how the the Dream for All program works. Not all lenders that work with builders are CalHFA approved, but you can certainly ask them questions. You can use Dream for All with new builds. And I understand the draw for new builds is you can get incentives because they're trying to move that inventory, but you're going to want to double check to make sure that lender is a CalHFA approved lender. I work with new builds all the time through Dream for All. Not a big deal, but certainly not all lenders either have the experience level or obviously have the certification. All right. Okay. And let me just kind of just keep on going away on some questions here. If a buyer has a credit score of 680, but he has a previous collection mentioned on his credit report, does he qualify still? So if I have a 680 credit score, but I have some collection activity, would that exclude me from Dream for All? Not necessarily. We'll have to look at the severity of the collection, but the minimum entry point, if you're considered a moderate income housing buyer, is a 680 credit score. Do we have to complete the 8 hours of education before we apply for the lottery and or the 1 hour shared appreciation training? We answered that earlier, no. We encourage you to take at least the 1 hour shared appreciation training just so you can get a better idea of how shared appreciation works. This is not free money. This is not a grant. It is a no interest loan that you're paying on the voucher portion, but it does have shared appreciation. So I think it's important to understand the mechanics of shared appreciation. I'll walk you guys through some modules tonight to provide a little bit more clarity for you. Now, this is the basic setup that you would have as an option with Dream for All. You obviously get up to 20% of your sales price in assistance or $150,000, whichever is less. So in this example I have on screen, someone purchasing a $500,000 home, that voucher would be for $100,000. Now they can take that voucher and apply all $100,000 to 20%, which would allow them to borrow less on the first mortgage, obviously eliminate the need for mortgage insurance. But some of our clients may not have enough money to pay for closing costs out of pocket, which closing costs in a home purchase can range from 2 to 3% of the purchase price. Obviously varies based upon your negotiations with the seller. But as you can see in our scenario here, you could take that entire voucher, put it all towards the down payment, or like we have some of our clients that we're working with right now, maybe I'm going to take out 85,000 of the voucher of 100,000, use that all towards down payment. And then I'm going to take the remaining $15,000 and apply that to my closing costs and my prepaid items. Now there's going to be a trade-off in terms of a higher monthly payment because, now I'm going to borrow more money on my first mortgage, but I'm also going to put myself into a mortgage insurance situation. So we need to be mindful of that because obviously that's going to change what our overall budget looks like. But we certainly have opportunities to kind of figure out the best way to maximize the voucher for you if, of course, you do get selected. If you apply, this question we have is just, if I apply this year, can I apply next year if I'm not selected? Well, we don't know if there's going to be a lottery next year because keep in mind, these funds are not coming from CalHFA. These are state general funds that get deployed to CalHFA, and the state basically tells how those funds are to be dispersed. So we don't know if we're going to have a lottery next year. This is not an ongoing thing. As you can obviously see, we haven't had a lottery since 2024. So we didn't have one in 2025, that we've skipped a year, and now we have one in 2026. So what really remains to be seen if we'll get more distribution of funds from the state's general fund. Can we buy down an interest rate, which is a question that comes up often? The answer is yes. In fact, I was working with a client earlier today down in LA on a buy down situation. So today's rate is at 6%. You can certainly buy down a rate in any time. Not something I always recommend to our clients because most clients, and we've talked a little bit about refinancing tonight, will probably consider refinancing in a couple years if rates go lower and they've made 12 payments on the Dream for All. Because it's about a 3 to 4 year break-even mark in refinancing or buying down an interest rate, I should say. My client that I was working with earlier today, they had to do it from a qualifying perspective for debt to income ratio. But yes, it is certainly something you can do. Now, let me just walk you through the shared appreciation example. Now, this is just a scenario that we've walked through in other classes that I've taught. You've probably seen some of those up on our channel. But I just want to make sure to provide a little bit more clarity on this. So this kind of starts here at essentially the purchase price of my home. So let's say I bought my home at day one. It's worth $500,000. That's what I paid for it. I decided to finance $400,000 and I have a voucher for $100,000, right? Okay, that's where my initial kind of launch point is with Dream for All. Now, 5 years later, that home now goes up in value. It's worth $140,000 more. And so now I'm in a better position, right, financially. So I have that equity that I'm sitting on. And at the same time, the Dream for All now has 20% of that appreciation will go into the shared appreciation component. Now, let's say I decide to sell the home, right? And I sell the home at that 5-year point. We projected that first mortgage balance to be somewhere around $370,000. I've received a voucher for the $100,000. So now what I would have to pay back at the sale of the home would be my original $100,000 plus that shared appreciation of $28,000. So essentially, I'm paying back $128,000 at closing of my home. But keep in mind, I also had $142,000 in equity. So when I go to sell my home, I walk away with some proceeds back from the sale of my home, but I've also paid back the first mortgage as well as the $100,000 original voucher and my shared appreciation. Okay, so that's where I think it helps to better understand like how does Dream shared appreciation work. If you are low income housing, which basically means I make less than 80% of the median income, then instead of my shared appreciation being 20%, it would be 15%. Okay, so that would shave off roughly about $6,000 off of that shared appreciation. Okay. All right, now we have a lot more people joining us and we're getting a lot more questions. Let me jive back to some more questions. We're going to kind of go back and forth with some slides and some questions that are coming up from our audience. And the next one is if you're selected for the if you're selected for the lottery and not able to close on a house within the 90-day time frame limit, is the voucher still valid, or would I have to wait again and apply it the following year? So I'm glad you asked that question because it's a little bit more to that. So the way the voucher works is when the voucher is issued, I don't have to close escrow within 90 days. I just have to be under contract with the seller within 90 days. So a lot of our clients that got vouchers in August of 2025 just went into contract last week because they had a deadline by February 18th to be under contract. Well, those people are now in active escrows. So the way it works with the voucher system is you get selected on day one. You have 90 days to go under contract. More than likely within 2 to 3 weeks of your voucher expiring, you may get an extension for another 90 days. I don't want to say that's guaranteed because I don't know with this voucher system this year if they're going to give an extension, but for those that got vouchers in 2025 and 2024, they had a one-time extension for an additional 90 days. Are DACA recipients eligible for Dream for All? Yes, DACA recipients are eligible. This follows the Fannie Mae conventional home guidelines. Okay. How long do we get to use it before the voucher expires? We just talked about that. That's 90 days, possibly another one-time extension for an additional 90 days. What if my income increases after being selected? So that's an important point. If you, for example, apply for the lottery system and you're within the income limits with the calculation that I have completed for you or your lender that you're working with, you get a voucher and then you go out and start going out and looking for a home. But let's say between the date that you submitted to the lottery and the date you actually get a voucher, you've had a 20% increase in income. We have to revalidate your income once you get the voucher. So just because you entered the voucher system with a certain set of income and you got the voucher, let's say in May or June, if your income has gone up, we will have to recalculate your income. So because we have to actually originate the loan. The origination of the loan happens once you go under contract with a seller. Now, in June of every year, CalHFA updates the income limits for all programs. Now, there's no guarantee that the income limit will change in 2026, but perhaps it may. That could help in a scenario where maybe your income has gone up and maybe you're at the limits of that respective county. Okay, and then... Okay, I think we actually got all those. Okay, so let's talk a little bit about, and this is just another way of looking at shared appreciation, and kind of see the dispersion of like where goes to Dream for All funds, what does the homeowner's equity position look like, and you can kind of see this over the course of 15 years. Now, our example shows someone selling at the 5-year mark, which is right here, but you can see kind of, the goal of Dream for All is not to continue to grab more equity from you as the owner. ultimately the goal is to help improve and create affordability for you and to create a building block of home ownership, not to, gain more money into the Dream for All fund. But, this example we have here assumes a 4% average appreciation in your home, but you can kind of see how that spans out over 15 years. All right, we talked a little bit about refinancing with Dream for All, but I just want to reiterate, you do have a one-time rate reduction opportunity on a refinance. And I say rate reduction because I do get questions often is, hey, Jason, I'm going to refinance with Dream for All. Can I take cash out of my equity in my home? You can't do that. You can refinance to lower that rate by, as I mentioned earlier, at least a minimum of 0.5%, or of course, save yourself $50 per month. But you do have to have at least 12 payments made on your Dream for All loan. You don't have to do a CalHFA Dream for All conventional loan when you do refinance. You can use any conventional product. We obviously start consulting with clients on Dream for All options as soon as they hit that 12-month mark, but we also target interest rate reduction opportunities. So for some of our clients that, purchased with their Dream for All voucher at 7% interest rate, well, now we're starting to have those conversations of, hey, let's start examining some savings opportunities in refinancing. Because the other thing to keep in mind with refinancing, it's not a no cost scenario. There are costs involved with refinancing. Generally, we recommend clients to budget $3,000 to $4,000 in closing costs for refinancing. So that's why we want to make sure there's a sufficient amount of savings for the buyer or owner at that time, so we can break even on those costs in somewhere 10 to 12 months is usually the goal. Okay. Now we've already been taking questions throughout tonight's class, but we're gonna keep obviously this open. We're staying live here. That's basically the end of the content, but we'll just kind of continue to take questions from you. And just, I know there's a lot of questions that we get out in our local communities. So question, we talked a little bit about this already, which is where can I submit my application? So the link will be available on the CalHFA website. Those of you that have already worked with us on your Dream for All pre-approval, we're going to be sending out the link to our entire database of clients that we've pre-approved over the last 3 to 4 months. So that'll be out in your inbox. So just be on the lookout for that. We'll have that go live as soon as we are made aware tomorrow morning. We'll also put it up on our socials too. So if you haven't been pre-approved with us, we still want to make sure you get the tools as well too. Okay, and then do people who have a work permit to work in the U.S. but doesn't have green card qualify to apply? So yeah, so there is residency statuses. You do not have to be a permanent resident to be eligible for this program. Depending on what your permit is, just let us know and we can cross-check that with the Fannie Mae guidelines. But this does follow the Fannie Mae guidelines as a conventional loan. But yeah, you do not have to be a permanent resident to participate in this program. Are there specific documents required from my parents to prove that they're first-time buyers? Do they need to provide documents for me to submit, or will this be done through the background check? So depending on who the first-time buyer or the first-generational buyer is, but if you're the applicant, when you go in to the profile to build your CalHFA Dream for All profile, you will put your parents' names in, and then those names will be researched, and then follow-up documents may be asked for. And so it's kind of more of a to-be-determined situation. So you'll get more information as your profile is constructed and hopefully eventually reviewed by CalHFA. Okay, other question, or not question, but thing that I want to kind of share with you, because obviously we've learned a lot with Dream for All, and this is essentially like our 4th year of running this, and I've been a pleasure of kind of being able to provide not only building of this program, but also to provide feedback to CalHFA to help just make it a better program to serve our communities. But one of the things that you'll notice when you go into your profile this year is that you will want to select all applicants that apply as first generation. This was something that was a little bit different 2 years ago, where only one person could be designated as first generation. So when you make your profile, let's say you're filing as a joint applicant, if you're both first generational buyers, go ahead and put both as first generation, because you want to make sure you both have that designation. Because what I've found in working with hundreds of clients through this program is sometimes we may have to change the construction of the financing, whether that's removing an applicant or maybe someone additional gets added on. That can all happen with Dream for All, but the first generational piece cannot go away, meaning we have to have that initial first generation person still be part of the financing. So for example, if we both apply as first generation, and let's say I got a big raise and now I don't qualify under the income limits, and maybe I'm just going to have just myself apply, or maybe another family member that's going to live in the house is going to be a part of the application for the loan because I have that voucher and I can still stay within the income limits. There's ways that we can reconstruct the financing so you can still be a part of the program, but that first generational buyer needs to remain on the financing. Okay, so I would just encourage you, make sure you designate all those that are first generation on your profile. Okay, and then what if I want to purchase in a county I don't currently live in, since the wait list is established by region? So you can purchase in any county across California. So if I live in San Francisco today, but I really want to apply to the Sacramento market because that's where my interest is because of a job move or whatever the case may be, you're more than welcome to look at any county. From a lending perspective, we just have to make sure it's a commutable distance or maybe that you're in a remote position, but you can participate in any county as long as you're within the income limits for that respective county. All right. Okay. Let's try to think of some other scenarios that we have across the market. Oh, let's talk about the maximum participation in terms of from a down payment perspective. I get this question a lot, which is the maximum contribution that you can make as a buyer on the program is 5% of the purchase price. So let's say, for example, I'm going to purchase $1 million home in Santa Clara County, right? Well, I have $1 million purchase. My voucher is going to be for $150,000 because that's the maximum that the voucher allows. The program will allow that buyer to add up to 5% of their own funds towards the down payment. So in this case, on $1 million purchase price, that's $50,000 in down payment. So I could essentially have my $150 voucher plus my $50K down payment. So then I would be contributing $200,000 to my down payment and then financing $800,000. Okay, so I think there's a bit of a misconception out in the marketplace that you can add more than 5%. You cannot do that. It's a maximum contribution of 5%. Now, for those that are going to purchase at that $1 million mark and then they have 150 as their voucher, now their shared appreciation is not going to be 20%. It would be 15% because it matches relevant to the purchase price. That makes sense. Okay. My wife bought a house with her sister before we got married. I am living with my wife in an apartment, and me and my parents never have owned a home. Can I apply on my name only, even though we are married? So the question would be, a follow-up on that is, are you living in the home that your wife owns? If you can let us know. Because if you're married and you live in the same home that your spouse owns, then you're not considered a first-time buyer for this program. Now, if that, and I'll kind of go a different direction with that scenario, if the wife owns the home but has not lived in that property, well, it doesn't really make a difference, but if the wife does not live in that property actively and you are living in a different property and you have never owned or had interest in that property, now you're considered a first-time buyer. Now, the first generational buyer component would apply, right? So if your parents don't own, then you would be a first generational buyer. And then, that qualifying could work. But I think the key element there is going to be, are you living in the property that your wife currently owns or has ownership interest in? Other question that comes up often is, and I think there's somebody that's posting something on social saying to do multiple applications by household. That doesn't work. When the lottery selection is happening, they look at total household. So you only get one application per household. So if I'm, with my partner and my partner puts an application, I put an application, that's not going to improve your odds for the lottery. It's only one application per household. Okay, so I want to provide some clarity around that. So we're hearing some noise out there that's being kind of talked about to improve your probability. That's not going to do it. So it's only one application per household. Okay. Another thing that comes up in questions is stacking other programs on top of the Dream for All program. For the most part, Dream for All is a standalone product, but there are unique programs like grants that will be complementary to Dream for All. One of the program that comes to mind is the Green Line program down in LA County that provides up to $35,000 in the form of a grant. They're willing to go in third position in the title to that home, and so that would qualify. I'm working with a client right now in LA buying with that program. So for the most part, assistance programs are not going to be able to complement Dream for All. It's going to be mostly a standalone product. But as long as a grant program is willing to go in third position in the title to the home, then it could be something that could be allowed. Now, you will still have that 5% maximum down payment requirement in place. So we'll have to figure out how we build the financing, but that is something that certainly we can look at. Things like the Golden State Finance Authority, some of these other assistance programs, those are completely separate product lines that would not work in unison with the Dream for All program. And the question was, when will we find out if chosen? So, like I said, we still don't know the dates on that. I have my speculation, but I think, we would be excited if it happened in May or June, but we do not know. I think it really just depends on how the background process goes, because everybody that's selected will have to go through a background, and depends on how quickly they send their follow-up documents to make sure that we can confirm their eligibility. So that's all really important. Is there any restriction on what kind of home I can purchase? I'm glad you asked this question. So it does have to be a one-unit property, which can be a single-family home, condo, can be a townhouse, even a manufactured home, but the manufactured home has to be on land that is owned. Okay, so it can't be like a mobile home in a park, not allowed. And the big thing is it has to be a one-unit property. So I can't buy a duplex, can't buy a 3-unit property. That's just not going to work, unfortunately. Other question I get around this is tenants in common. We see this in some of our more denser populated markets. So you cannot purchase as a tenants in common, because obviously tenants in common, you do have like shared interest in the property. That doesn't work with Dream for All. And then in my experience, what percentage of clients have you seen were waitlisted and then eventually given a voucher? That's really hard to kind of pin down. I haven't pulled that data yet. We do recognize all of our clients that are selected, as long as they advise us they're selected, and then waitlisted. So I couldn't tell you what that number looks like, but whether you get number 5 on the wait list or number 1,002 on the wait list, there's still encouragement out there, because just ask some of the clients that got vouchers this year, because Dream for All announced another wave of release of funds. We had clients in August, probably over 70 clients that were on wait list. They got a voucher in August and now are proud homeowners. So I think if you're not selected, it's not the end. There could be an opportunity down the road. Now, if you're not selected at all, I think there's, we definitely would want to connect with you and talk about other first-time buyer options, because CalHFA has some wonderful products, whether it's the My Home Assistance Program, providing 3% of your sales price in assistance, or the My Access program with 2.5% of your loan amount assistance, or the ZIP program. There's a lot of different things that we can do to help make homeownership achievable for you. So I would still hold strong that it can still happen for you. Or if you certainly want to wait for future lottery opportunities, we just don't know when and if that will ever happen. Okay, so I think I answered that question. Okay, cool. Let's see if there's any other questions that come to mind that we're getting quite often. I think I've kind of shared with you most of that. If you haven't started the Dream for All pre-approval process, it's not too late. We can send you a follow-up of the links to start the process. We have a couple different options to make it easy for you. I meet with all clients that would like a consultation with me one-on-one to go through their Dream for All options and obviously talk through their qualifying and how the best way to maximize the Dream for All pre-approval. And then obviously we issue the pre-approval that day. We also have an express service. They can help you kind of get through the process a little quicker if you don't feel like the need to meet with us for a consultation. But generally, we can have a pre-approval done for you in 24 to 48 hours. We've helped thousands of clients for the Dream for All pre-approval process. And, we are the top CalHFA lender in the marketplace. So we will definitely make sure that you have all the tools and resources to be as successful as you can in the lottery. And so, ultimately, we want to make sure that you have, videos like this to be able to get the right information so that you can be an informed consumer. Enter the lottery if that works for your financial and obviously your home buying goals. Okay. What other questions do we have from our audience? You guys asked me a lot of great questions. I love this kind of format to be able to kind of go back and forth with our audience. So a lot of people are still tuned in right now. So just want to make sure that I cover anything that comes up. And I always, like to share, my experience with Dream for All. This has been a program that I think has, made so many amazing homeownership dreams come true. We're passionate about serving our local communities and homeownership. It's just something that that's our calling here for our team. And, I think, this is just another tool that's available to you as, consumers purchasing in a high cost of living market like California. So, I think with this program, I think it's really important to work with a lender that understands the program, that's had experience with it. We've been through every scenario with Dream for All, I can assure you of that. Whether it's trying to make sure that our clients are registered properly or locking in a rate properly, or just making sure the loan is structured properly. All lenders are not the same with this program, so there are fee structures that look differently between different lenders. And our mission is to serve in this program, but not at the same time give a fair and equitable program and cost structure to our clients. So I think we've done a really good job of that. But it does look a little bit different lender to lender. Every interest rate is the same for every lender, depending on what day they lock in your interest rate. But the cost structure, what I've found over the last 4 or 5 years doing this program, it does look a lot different across markets. All right, I'm gonna go back to the question, which is about PMI. And I guess it's just kind of a general question around PMI. The PMI rules still apply the same for this program. So if I put less than 20% down, I do fall into PMI. What PMI is, it's private mortgage insurance. So if I do put that less than 20% down, there's private mortgage insurance companies that essentially insure the lender against, say a default by the buyer. But if you put 20% down and maybe use the voucher for that entire amount, then you would not have PMI. On our YouTube channel, I have classes that we teach throughout the year, usually twice a week. We have a segment on private mortgage insurance. I'd encourage you to check that out. We dive into, PMI, what are the factors that go into PMI, as well as comparing it versus FHA mortgage insurance. And again, just to reiterate this is a conventional loan with Dream for All. It follows the Fannie Mae conventional home loan guidelines, okay? So it's not an FHA loan. Quite often, clients will get CalHFA and FHA kind of confused, but CalHFA is the California Housing Finance Agency. That is kind of the umbrella of the agency. And under CalHFA, we have products that are available like Dream for All. But Dream for All does follow the conventional guidelines for Fannie Mae. Speaking of conventional guidelines, if you're considering a condo, this is kind of important. You do have to have a condominium that meets Fannie Mae condo requirements. So we find that often where maybe a community is not up to code for Fannie Mae guidelines, whether that's health and safety items, whether that's financial requirements, whether that's litigation that's against the community. So it does follow Fannie Mae condo guidelines as well too. So just something to keep in mind. So there are what we call non-warrantable programs that are out there, but that's in a completely different space that does not follow the Fannie Mae guidelines. Thought I would cover that because condos come up often, and we have our fair share of experiences, some good and some bad, with certain HOA communities across the state because things have changed a little bit in that space. All right, I want to make sure I give everybody that forum to answer or ask any of those questions that come to mind. So any of the questions from our audience before we wrap up tonight's session? I want to make sure you have all the right answers as you prepare for the lottery tomorrow. I know this is going out to a lot of our clients that we've helped over the last 4 months get pre-approved, but for some of maybe the new clients or people are just reaching out to us because of our live stream tonight, feel free to reach out to me directly if you do have questions that I can help support you with, or if you just want to make sure you get your pre-approval structured properly. I'm more than happy to help you do that any way possible. All right. I know we have a little bit of a delay, so I'm going to give it just a minute, and then I think what we'll do is we'll go ahead and wrap up our live stream. But yeah, I really appreciate everyone kind of spending some time with us this evening. I do hope you guys have all the success with this program. I hope it fulfills your dreams of home ownership. But again, I would give you encouragement. If it doesn't happen, whether it's in this round of the lottery, please get connected with us, because there's so many other tools out there that we can kind of investigate and see if it's a good fit for you. And then, of course, if there's a future lottery opportunity, we'll obviously share that with our communities as well. All right, well, I wish everyone a great rest of the week. Have a wonderful Monday evening, and we'll look forward to checking back with you soon. Have a good night.